Good morning, everyone. I'm Beibi Jasina, and today I'll be talking about the topic of central bank digital currencies, what they are, how they work, and the possible impacts they can have on society at large. So let's start by defining what they are. So central bank digital currencies, or CBDCs, can be defined as a digital form of government-issued currency that isn't pegged to a physical commodity. They are like cryptocurrencies, except their value is fixed to a central bank and equivalent of the country's fiat currency. So just to give context, a central bank is an institution whose role is to support financial services for a nation's government and its commercial banking system, to set monetary policy and to issue currency. So there are various types of CBDCs, but the main categories are wholesale and retail CBDCs. Wholesale CBDCs are like holding reserves in a central bank. The central bank grants an institution an account to deposit funds and to use to settle interbank transfers. On the retail side, retail CBDCs are government-backed digital currencies used by consumers and businesses. Retail CBDCs eliminate intermediary risk, the risk that private digital currency issuers might become bankrupt and lose customers' assets. So how do these models actually work? Well, for the wholesale model, the central bank creates and issues digital currencies, which is stored in electronic wallets or accounts maintained by the central bank. Financial institutions such as bank and other eligible market participants can hold and transfer the digital currency amongst themselves as a means of settlement for interbank transactions. The wholesale CBDC can finally facilitate real-time settlements of financial transactions, improving efficiency and speed of interbank settlements. In the case of the retail model, the same as wholesale. The second aspect is that the digital currency can facilitate real-time settlements of financial transactions, improving efficiency and speed of electronic payments. Then individuals, businesses, financial institutions, and other entities can hold and transfer the digital currency amongst themselves as a means of payment for goods and services. So now that we've discussed what they are, let's look at their possible impacts. So the advantages of the goals of CBDCs are actually reduced costs. According to McKinsey, financial service providers stand to save $400 billion annually in direct costs by shifting spending away from physical infrastructure towards digital finance. Increased speed is another advantage. CBDCs can be easily accessed and provide fast and secure electronic payments. They can establish direct connection between consumers and central banks, thus eliminating the need for expensive infrastructure. There's greater access for those without bank accounts. There's heightened security, and they eliminate the third-party risk of events like bank failures or bank runs. Any residual risk that remains in the system stays within the central bank. Now let's look at the cons of CBDCs. Financial structure changes is one of these cons. There's still uncertainty about how they would affect household expenses, investments, banking reserves, interest rates, and the whole economy at large. So financial system stability is another one. The issues that would actually cause stability of a nation's financial system is unknown. There may not be enough liquidity to facilitate withdrawals during a financial crisis. Privacy and protection is actually a major concern as well. In terms of cybersecurity, just like cryptocurrency, CBDCs will likely be a target of hackers and thieves. So on the issue of privacy and protection, state surveillance and the abuse of and misuse of CBDC data by central banks and intermediaries is actually the biggest concern in the public domain. And these concerns are actually not unfounded. They are based because CBDC vulnerabilities could be exploited to compromise a nation's financial system. CBDCs would be able to accumulate sensitive payment and user data at an unprecedented scale. So in the wrong hands, this data could be used to spy on private citizens' transactions, obtain security-sensitive details about individuals and organizations, and even steal money. So monetary policy is another topic that is worth discussing. So in terms of monetary policy, central banks can use both wholesale and retail CBDCs as a tool for monetary policy by adjusting interest rates. So in the case of the wholesale model, just like today, this will have minimal direct impact on the consumer and the country and the citizen of the country. But in the case of retail CBDCs, this will have a major impact on citizens and consumers, as the digital currency held in a digital wallet will still technically be property of the central bank and subject to the bank's direction. So the specific designs and features of a retail CBDC will depend on the goals of a central bank issuing digital currency. Actually, they say that some countries have stated that some of their CBDCs will actually expire, and some of them will be set up in such a way that they can only be spent and not saved. So in the South African context, South Africa's central bank was actually one of the early innovators of the CBDCs when it ran the Project Coca CBDC experiment. So Project Coca was a distributed ledger technology initiative that was launched by the South African Reserve Bank in 2018 to explore the use of tokenization within the South African financial system. So this initiative did so good that it won Central Banking's FinTech and RegTech Award for Best Distributed Ledger Initiative of 2018. The reason being was that the Reserve Bank was able to bring in 90% of all banks that processed daily payments within South Africa within the initiative, and they processed 70,000 transactions within 2 hours. So the South African Reserve Bank Governor, Lesetja Kganyago, spoke at the World Economic Forum in Davos earlier on this year. And one of the main topics was actually CBDC implementation on a global scale. So he outlined that although the South African Reserve Bank is eager to fully launch its very own CBDC, the implementation of retail CBDC model is not within the current peripheral of the institution. He was quoted as saying, with respect to retail CBDCs, we cautiously took a decision that we are going to be very good students. We are going to learn with everybody. We're not going to be the first movers. We would rather be very fast followers because of its complexities. So beyond the horizon, as it stands today, according to CBDC Tracker from the American think tank Council, almost a dozen countries have fully deployed CBDCs, and just like South Africa, about 90 other countries have launched CBDC pilots, development, or research programs. So out of these countries, retail CBDCs are already being implemented and developed by several central banks, in contrast to wholesale CBDCs, which are mostly being tested by a few countries for the time being. So it is evident that although we're still hesitant here back at home, the global sentiment is leaning towards the favor of retail CBDCs. So considering the massive potential impacts that are possible for both businesses and individuals regarding CBDCs, I think there's enough reason for us to have hope. But in our hopefulness, we have to be cautious because the other side of the coin still exists. So, but either way, I mean, what the future holds, it's only up to it to show us. Yeah, that's my piece. Thank you very much.